So with May 2025 now in the books, we've had 8 full months of the YieldMax debt payment test strategy. In the beginning, things were great. We've hit some rocky patches, but dare I say it, are we about to see a recovery? What's up, you guys? Welcome back to the Average Joe Investor channel. In today's video, we're recapping the month of May 2025 for my YieldMax test strategy. This was a test that began in October of 2024 with a $3,000 portfolio. The goal of the test was to be able to create $184.29 in monthly cash flow to pay for a specific recurring debt. In this scenario, if I generate more than $184.29 in any given month, then that extra capital is reinvested into one of the 7 different YieldMax ETFs in the portfolio. If I fall short of the $184.29 in any given month, then I take whatever I did earn and deposit it into my regular account. So what we're gonna do now is we're gonna break down what happened in May of 2025, and we'll look holistically at the whole portfolio over the entire time frame to see how things are going and what's happened in the past. All right, let's go ahead and dive into the spreadsheet here. By the way, this spreadsheet you can have access to along with all of the other spreadsheets I've created by joining the Average Joe Investor Patreon community. There's a link down in the description below, access to spreadsheets, access to office hours with Joe, which occurs every single weekday, where I live trade my own portfolio, and an amazing DIY investor community. If you're interested, check out the link down in the description below. In this debt payment strategy, I'm tracking all of the income from these 7 different ETFs. To be specific here, I equally weighted at the beginning across 7 different ETFs: AMDY, CONY, MRNY, MSTY, NVDY, TSLY, and ULTY. Some of these numbers right here in the cost basis vary a little bit because I had some initial months where I had some extra capital that was reinvested into specific ETFs. Let's go ahead and move down here to May of 2025 to see what happened this month, and then we'll compare to previous months, and we'll also look at some total numbers. If you can recall here, in April of 2025, we fell radically short of our goal. We wanted to make $184.29. We only made $102.08. So a far cry from what we were expecting. May of 2025 actually was somewhat of a recovery. We actually met our income goal, which was very hard to believe. It did end up resulting from mostly because of the fact that we received some extra distributions on the very second to last day of the month, which without that we would have fallen short, but it was still been pretty close to our monthly distribution goal. You notice we received distributions here from Ulti, which occurs every week, and we've got AMD, Coney, Misty, Tesla, Murni, NVDY, AMDY, CONY. Total distributions for the month here, $193.24, which exceeded our goal by $8.95. Now, as you can see here, these 3 last distributions here were above and beyond because we'd already received AMD, Coney, and Ulti at the beginning. Here's a look at the overall trend from the beginning to the end, and we'll look at a graph here in just a sec. October, November, and December were all great. They had distributions exceeding our monthly goal. Then we just barely met our goal in January of 2025. February, we fell short, not by a lot, but by a little bit. March, we fell way short. April, we fell even shorter, and you could obviously see there was not a great trend happening here. So coming into May, whether we count the last 3 distributions or not, and I tried my best to keep this on a monthly basis. So if I get extra distributions one month, then that maybe will offset in the next month. But I try to keep it all of the distributions earned between the first of the month and the last day of the month. So even if we had not included these 3, we would have fallen short by about $31.01. So it still would have been a much better improvement compared to April of 2025. But when we factor all of them in here, we did meet our goal by an excess of $8.95. This graph reflects the changes in monthly cash flow compared to the portfolio value. Obviously, with YieldMax, and we're going to look at this in just a second, we've had significant erosion in the underlying capital, but what we do see here is that the income has still been really solid. You can see here over this time frame we made 237, 261, 251, 189, 166, 125, 102, and 193, which is all graphed right here. And then the orange line right here reflects the portfolio balance. Obviously, we started with 3,000 and it dropped to 2865 in October. Then we were up a little bit, and then we've been slowly going down, which has not been ideal. In fact, if we go back over to the main spreadsheet and scroll up to the top here, let's break down some of the total portfolio numbers here. First off, total distribution income over this entire time frame has been $1,527.66. Again, we started with $3,000 in our portfolio, and just so you know, this number here is changing real time. You actually just saw it happen. This is all tied to the actual price. So as these prices change, my portfolio value and my total return change. Monthly expense is $184.29. Total capital erosion that has occurred on the portfolio is $1,229.30. With the $1,527 I made so far, I'm 51% of the way towards reaching a goal of $3,000 in cash flow. Now we can see here with all of these 7 different ETFs, we've experienced significant levels of capital erosion, the least of which is MSTY, which has been the shining star here. This one is down 20.48% still. Overall, capital losses of $98.72. But some of these have been significant, 69%. 38, 46, 38, 32, 37% drops here in the underlying capital, meaning that from the cost basis level to the current value, that's how much it's dropped. Now, that doesn't mean that that's the total return, because remember, we have to include the distributions. That's just the capital gains or losses here. If we look at the total distributions, we move over here to column I right here, we'll see that there are varying levels of income that have been generated as well. The least of which is right here. This one has been terrible, MRNY. This investment has lost the most value, and except for AMDY, has the lowest level of distributions. The shining stars here are MSTY, right here at 389, CONY at 280, and then we also have 224 and 215. Just as a quick aside here, one of the things I'm considering is taking some of these losers, the ones that are not performing very well, both on the capital front as well as the income front, and say, hey, let's just take that capital and merge it into these other ETFs to see if we can pop that cash flow up even higher. So more to come on that. I'm still haven't decided what I want to do, but it's something I'm definitely considering. And then when we factor in the total distributions here with the capital gains or losses, we get our total returns. And with that, the numbers look radically different. We can see that the total return here is negative for 2 of them. AMDY has dropped 18% in total returns, and then MRNY has dropped 44% in total returns. The others are actually positive when you factor in the cash flow. We've got a 30% return here on Coney, 60% return on MSTY right here, 9% with NVDY, 21% with Tesla, and then 13% with Ulti. So factoring those in, you would think that maybe this one right here, AMDY and MRNY, might be right for a reinvestment into other ETFs to say, hey, these are just not working out, either from a capital standpoint or from an income standpoint. And I really want to take that opportunity and move this capital potentially into some better yielding investments. Overall, when you factor in the current value of these investments and the income generated, total returns, and this is, you can see this is constantly changing, right now shows $32.90 and 26 cents. If you take that number compared to 3,000, it's a total return of 9.68%, though today alone it's been as high as 11.5%. Ultimately, I plan to keep this YieldMax test going all the way through at least $3,000 in cash flow generated, and from there I may just decide to say, let's just keep this going in perpetuity, at least for a period of a few years to see just how it performs over the long term. As a quick reminder, and I've mentioned this in previous YieldMax update videos, the YieldMax funds are very unique, and I am not a fan of utilizing them for anything other than paying for expenses or debts that are there on a recurring basis. I don't love the idea of investing long-term for retirement in them or creating cash flow or putting a significant amount of capital into them. I think, though, that there is maybe a use case, as I'm doing right now, a use case in setting aside a certain amount of capital, whether it's $500, $3,000, $10,000, and then paying for a specific expense with that capital. And then if it is able to pay it for more than the duration of the amount that you invested, then it's a winning formula, even if it experiences significant capital erosion. So something to consider there. Definitely a use case there for paying for debts, but again, beyond that, I would not recommend that in any way, shape, or form. Hopefully you found some value in this video, guys. Make sure to leave your 2 cents down in the comments below. It's my goal to respond to as many of those comments as possible on the day I post a new video. That's all I got for you guys. Have a great rest of your day, and thanks for watching.